Let me just make it as clear as possible. Quit buying you don't need, okay? Today's video is sponsored by Get Artie. More about that later.
Reezy Resells. Follow the hustle.
Hey, hi, welcome to the video. This video is going to cover 5 huge mistakes that many new Amazon sellers make. I'm actually going to be going over 5 whole types of mistakes that Amazon sellers make. So it's going to be more than 5. It's going to be 5 categories, if you would, of mistakes that Amazon sellers make. The goal of this video is to teach you what not to do, and hopefully through this video I can help you guys not make a lot of those same mistakes that many beginner Amazon sellers, myself included, have made in the past. And I know you're likely here because you're interested in retail arbitrage or online arbitrage or maybe selling books on Amazon, but I can tell you that many of the tips in this video apply to not only all Amazon business models, but also to just a lot of business models. So even if you're not an Amazon seller, there will be useful information in this video for you. And even if you're not interested in retail arbitrage, you're a wholesale seller or a private label seller, there will still be a lot of value for you. So enough of me yapping my trap. Let's get into helping you not make mistakes. Let's start this off with a banger. So one of the biggest mistakes that I know a lot of sellers are making is that they're taking too much B3. And what I mean by that is that they are having bad buying behavior, okay? And bad buying behavior is literally probably the thing that's single-handedly most responsible for crushing people's new business. And like I said, it's not just Amazon businesses, but in any business. You make your money when you buy or when you invest in your business. And if you're doing that badly, you're pretty much dead in the water before you even get started. Let me just make it as clear as possible. Quit buying you don't need, okay? In this field of selling on Amazon, everybody is trying to get you to buy something. There's software and services and inventory, of course, inventory. But not only that, a lot of people, they spend way too much money when they're trying to get started. They are registering their business. They are buying all the supplies that they need. I got a new computer. I got a new printer. I got a new desk. I bought a course. You don't need any of that stuff. Quit wasting your money. When you get started selling on Amazon, all you need to focus on for the most part is inventory. You probably have everything else you need. You can learn for free off of YouTube what you're doing right now, right? You don't need a course. I'm not saying courses are bad, but if you can't afford it because you only have $1,000 or you only have $5,000, maybe you shouldn't be spending $500 or $1,000 or $2,000 on a course. My advice is that you save that money and use it for inventory and bootstrap your business until you know what you're doing. All right, let's pause for a second so I could introduce you to the sponsor of today's video, Artie. Now, you know how much I love saving money and boosting profits, which is why I'm so excited to introduce you to Artie. Artie is your new digital AI-powered assistant specifically made just for us Amazon sellers. Now, having Artie is like having a genius best friend that knows everything about your Amazon business. I'm serious. Let's break down what Artie can do for you. Artie can help you get reimbursements for lost and damaged inventory. And guess what? This is the best part. Wait for it. They do not take a commission on these reimbursements. This is unprecedented. There is not another software in the entire Amazon software industry that I know of that can help you get money back for lost and damaged inventory and not take a percentage. All of the competing softwares take a percentage, but this is just another feature included with Artie that will help you make more money without bleeding you dry on commission. Artie will tell you what to reorder, when to reorder it, and how much of that item that you need to reorder so that you don't ever go out of stock again. Artie will automatically find and suggest product bundling opportunities for you based on the items you already have listed in your Amazon account. Now, what does this mean exactly? This means that if you sell product A and you also sell product B, and Artie detects that there's a profit opportunity for you to create a new bundle with product A and product B together on the same product listing, it will automatically let you know and help you to create those new listings so that you can make more money. I know, it's genius, right? But did I mention it's AI? Because we should probably be expecting that at this point. Artie tracks everything from your ad performance to your profitability and even your customer reviews. Artie got its eyes on everything. Now, with customer reviews, we all hate it when we get a bad customer review, and that can definitely affect the sales on your Amazon account negatively. But how long will that bad feedback sit there before you notice it? Because if you have Artie, Artie will let you know immediately. As soon as you get a bad feedback, Artie will notify you in your dashboard. That way you can go and handle it and hopefully get it removed so that it doesn't affect your sales and so that you can make more money. This next one's super cool. Artie can help you with your customer feedback. So every time you make a sale, after it's delivered to the customer, Artie will automatically contact the customer and request feedback. This is great because this helps you accumulate many positive feedbacks, which will help you offset any bad ones you get that you can't get removed. Artie also monitors and manages the product dimension measurements of all of the items in your inventory all the time. If you've been selling on Amazon for any time at all, you know that they charge you different fees based on the size and weight of your items. Now, a very minor adjustment in a product size or weight can equal a lot more charges to you. And sometimes it can be a large change, whether it was done maliciously by a competitor or someone just fat-fingered their keyboard. Artie will save you a ton of money by alerting you to the inconsistencies in your product dimensions and automatically walking you through the process of getting it back to the proper product dimension, size, and weight, as well as telling you how much money you're gonna get reimbursed for pursuing that action. This is incredible because this is a huge problem in Amazon selling that I don't think any other software deals with. Using AI to monitor and manage the product dimensions of all of your products, all of them. This is insane. Look, I wouldn't be doing this sponsorship or telling you guys about this product at all if I didn't think it was at least gonna be useful for some of you guys. It's definitely worth looking into just because of all of the different features that the software can do. It's like taking 5 different softwares that you're paying for and putting them all into one. Artie is really that versatile. It's like the Swiss Army knife of Amazon software, in my opinion. Think about it like this. Having Artie is like having an entire team of people behind you without having to write all of those paychecks to pay that entire team. And that is a great thing. And here's the best part. You guys can get 2 months of Artie for free. Yes, you heard me correctly. 2 whole months of an AI-powered Amazon assistant made specifically for Amazon sellers for free. So make sure you guys click the first link in the description below so that you can be on your way to having less headaches, more profit, and saving a whole bunch of time. Do not sleep on this exclusive deal. Get Artie and get ahead. All right, that's enough for me. Just make sure you guys go to getarty.com. That's getarthy.com and start winning on Amazon today. Now let's get back to the video. When you get started selling on Amazon, you don't need any of that stuff that I mentioned. All you really need is a computer and a printer, a regular printer. If you're doing FBA, you need some 30-up labels so you can print FBA labels. You need some boxes to mail stuff to FBA or to customers if you're doing merchant fulfilled. You can get boxes for free from various places, the back of the grocery store, wherever. You probably have some boxes, right? You need tape to back those boxes. You need a tape gun. You need a scale to weigh those boxes. Just a cheap $20 scale. I'll put links in the description for the stuff that I recommend that you actually need when you get started. But for the most part, you don't need half of the stuff that people are telling you you need. You don't even need a scale. You could use your bathroom scale. You could get away with it. Not if you're doing merchant fulfilled, because you actually need to weigh packages accurately to send to the customer. If you don't have money, don't trip on thinking that you need all of this different stuff. What you really need to do is focus, learn, take your money, buy products, sell them on Amazon, turn it into more money, buy more products, and rinse and repeat, okay? And as you go along with your business, you should invest in things that you need, and you'll know you need them because they're either going to make you more money or save you time, okay? And even with services, I recommend that you do stuff the hard way first so that you at least understand what a service is doing for you and how it's saving you money or time or whatever. Because if you're not aware of what's going on, it's very easy to just buy all kinds of stuff and be like, yo, I bought tactical arbitrage, I bought Seller Amp, I bought Keepa, I got a scanner, I got a scanner app, I got a printer, I got all the right boxes I need, I got 82 rolls of tape, and then maybe, guess what? You find out you don't even like reselling. So it's like, figure out if you feel like you're a good fit for this business first before you go diving head into it and just investing in stuff that you may not need, right? You might like buy a box resizer only to realize you don't even really use it because you just cut boxes down, it's faster or whatever. Like stuff that you won't know because you don't have experience, right? Like my pet peeve is when people are like, yo, Reezy, I bought all the supplies that you listed, now I'm ready to go. And I'm like, yeah, you are, but like you didn't really need to do all that. The moral of the story is that you can get by using the free Amazon seller app, as long as you're not intending to be a book seller or a media seller. Because if you're a book or a media seller, you're gonna be scanning so many things that I recommend that you get a scanning app right out the gate. It's just gonna save you so much time. The free Amazon seller app is not built to be able to use a barcode scanner or to even scan items quickly. So if you're a book or media seller, I think you should get Scout IQ. But other than that, you can get by using the Amazon seller app. And I wouldn't even say that you need Keepa at first, because using the Amazon seller app and a sales rank table or chart, I give out free sales rank charts every month. Sign up for that in the description. But using the free app and the sales rank table, people like to call it a chart, it's really a table, you can make educated buying decisions without paying $20 a month to have Keepa. Now, don't get me wrong, Keepa is a great investment, but you're gonna pay $20 for Keepa, you're gonna pay $40 to be a pro merchant. You don't even need to be a pro merchant. Don't sign up to be a pro merchant on Amazon, which is $40 a month, unless you're selling 40 items a month or more, or you're jumping straight into advanced retail arbitrage and online arbitrage, and you're trying to get ungated or approved to sell restricted brands or categories, because you can't apply for those if you're not a pro merchant. But if you're not doing that and you're not selling 40 items a month or more, you're basically throwing money away by being a pro merchant. So I don't advise anybody to spend that $40. And when it comes down to it, if you're a beginner and you're gonna spend $20 a month on Keepa, I think it would be better for you to invest that $20 into a Seller Amp subscription, which comes with a mobile app. It's a scanning app. They have a web app. They have a Chrome extension. It's a very useful thing, and there is sales rank charts built into the app, as well as a whole multitude of other information that you can use to make purchasing decisions while you're out and about. Now, it's not going to be good for booksellers, like I said, because it doesn't show used prices. It's made for retail arbitrage and online arbitrage sellers, and you could use it for some other stuff, I'm sure, as well. But if I was faced with either spending $20 a month on Keepa or buying Seller Amp, I would just spend that $20 on Seller Amp, because you get a scanning app and charts. It's a way better value. Now, obviously, once you get into the game, yeah, you should get Keepa, because that's the cornerstone of all Amazon sellers' knowledge. That's the foundation, right? That is how you understand how something sells. Now, as far as bad buying behavior goes, I covered software and services and tools and hardware, equipment, all that stuff. But it also applies to the actual products that you're buying to sell on Amazon as well. So a couple things as far as products that you're buying to sell on Amazon to make money. One thing I see a lot of beginners doing is buying the same stuff that everyone else is. Don't buy what everyone else is buying. Sure, there is certain scenarios like during the pandemic when pools were flying off the shelf, when chlorine was flying off the shelf, when patio heaters were flying off the shelf, when hair clippers were flying off the shelf. Those are all hands on deck moments, and you should go full speed ahead. And yeah, everyone is buying it, but the demand is so high, it doesn't matter. What I'm talking about is that when you see your favorite guru or Amazon influencer and they have a cart full of products and they're at Marshall's, or they're making a reel showing you products that they buy in Marshall's, and look how much it sells, and this is how much money we're gonna make. Click my link in bio to join my Discord. those people are really just trying to sell you a course or get you to subscribe to their Discord or buy their leads list. They're most likely not even buying that product that they're showing you is so profitable, or that cart full of products that you see on their Instagram in their picture or TikTok or whatever. They probably didn't buy any of it. They probably took all of those products and put it back on the shelf afterwards. And they might even be profitable. But the problem is that if they post it, other people are going to go buy it. Everybody's going to buy it and the price is going to tank. The money and the reward is in finding your own products, your own valuable leads that you don't share with anybody, that you don't post online. You're not trying to get clout. You're trying to make money. So please just be aware that people have ulterior motives. And I'm not saying people are bad actors. I'm just saying if you build your business off of buying what everyone else is buying, you're not gonna have a business for very long. And as you transition out of being a beginner seller into being an intermediate Amazon seller and on your way to being an advanced Amazon seller, it will be so obvious to you that these are bad products to buy and that these people are being ingenuine, whatever. Just please be wary of any time you see anybody posting a bolo. Like for example, when I post products on my YouTube videos, or you see videos of me buying products and you see the actual product, it's long after I've already sold that. I film the videos and then I sell my inventory and I wait till it's all sold out, and then I make a video showing you the product and giving you that example. Now, why would I do that? Because you can't go buy that product right now. So how is that helpful? It's helpful because it gives you an example. It shows you a real life example of a product that I bought, why I bought it, how much I sold it for, and how much I made. And I will never be someone to give away products on YouTube or Instagram. And the reason is because it doesn't teach you, the new Amazon seller, it doesn't teach you anything. If I give you a fish, sure, you're gonna eat today, but you're not gonna eat tomorrow because you're not actually learning how to fish. Learning how to fish involves things like going fishing and not catching any fish, or catching fish and then they're slipping off the hook. You see what I'm saying? You need to learn through your own experience. And not only that, but it's harmful to the intermediate and advanced sellers who have already done their homework, they've already paid their dues, that are selling those products. So be quite leery, be extra leery of those types of products that are being shown publicly for free on Instagram, on YouTube, etc. Now, there's another type of bad buying behavior that I see a lot of Amazon sellers making, and that is just overbuying in general. Because if you buy a ton of product and it doesn't sell, you're left with some crap, and you might have to go take it back to the store and return it, which I don't advise, because guess what? That is going to make a bad reputation and a bad relationship with you in a retail store. And returning too many products to an online store can get you banned from purchasing online as well. So you don't want to get in the habit of doing that. And also, when you return stuff, it's like an escape hatch, and it kind of softens the blow. And I understand if you absolutely have to, because that was all your money, right? And you made a mistake, cool, take that walk of shame and handle your business. But if you make a habit out of it, it makes it so that you don't learn from your mistakes as much, because your bad buying decisions don't hit you as hard. It's different when you buy some stuff and it was bad, and now you have to liquidate it and you're losing money. Like, you'll remember that, you know what I'm saying? So do what you gotta do, but at the same time, you really need to avoid overbuying as much as possible. So when you think you found a great product, don't just immediately clear the shelf and buy everything. Like certain situations, let's say you're looking at buying a product online and you could get a lot for a good deal. And this applies to like private label and wholesale as well. Maybe just go get like 5 or 10, either from where you're thinking of buying it, or maybe just go to the retail store down the street and overpay for like 5 or 10 just so that you can list those products on the product detail page and see how quickly they sell. Because if you buy 5 today and they all sell today, now you kind of have a better understanding of how quickly they sell, and you can feel more confident making a larger purchase versus just buying 100 because they were on clearance or whatever, and now they're not selling and you're stuck with them. You see what I'm saying? Or you have to return them and that's going to cost you money or whatever. It's all a nightmare. So just remember, in certain situations, you can test buy. Make a test buy, right? Like let's say you're in a store and you find a really great product and they have hundreds of them on the shelf and you're thinking, this sells quick. This sells really quick, right? You're looking at the sales rank chart, whatever. You're making your decisions. Just list them while you're in the store. Well, you haven't bought them yet. Just throw maybe like 5 in your cart and list 5. and then keep walking around the store doing your retail arbitrage, because sometimes you're in the store for an hour, 2 hours, maybe even 3 hours if the store is big enough. If it's a great product and you price it properly, you should sell some of those units while you're in the store. And then you can just buy those, check out, and you'll have an understanding of how quickly they sell. So you might also go grab 10 more or 20 more. But let's say the opposite, you buy 100 because you see the great deal on the shelf that you think sells really quickly, and then none of them sell. Do you see what I'm saying? Like, if you would have just put 5 on your cart and then listed them active on sale, merchant fulfilled on Amazon while you walked around and they didn't sell, maybe you feel differently now. You've had the buy box for 2 hours in the store and none sold. Do you still want to buy 100? Probably not, right? So be aware of overbuying, because that can wreck you easily. All right, this section is going to cover Amazon fees and how to know if you're actually making any money, and just how to be aware and stay on top of all of the different charges that are involved with being an Amazon seller. And the next section after this is actually going to cover things like hazardous materials and, very important, getting approved to sell big brand names and brands and categories that you're restricted in. So make sure you stay tuned for that. But first, let's just go over these fees, because if you don't understand how Amazon fee structure works, you might not even be aware that you're being charged for things. What, you didn't think it was free to sell on Amazon, right? You know it's pay to play, right? Like, Bezos got to get his cut, you feel me? All right, so let's cover the basics. First off, Amazon charges a commission that is roughly 15%, and that is on anything you sell on Amazon. It could be more or it could be less depending on what the category is, but for the most part and on average, it's about 15%. This is what Amazon takes out of the order off the top, because they created the platform. They brought all the boys to the yard. You know what I mean? You're utilizing their organic traffic. And these are actually Amazon's customers. They're not our customers. You know what I mean? They're Amazon's customers. So Amazon gets that 15% commission for creating this opportunity for us. And if you choose to sell FBA or fulfilled by Amazon, that's where Amazon stores your products and ships it to customers for you when it sells. They're not buying it for you, just to clear that up for some of you guys that don't know that. There's fees for that as well. And there's fees when they store the items. These are called FBA storage fees, and they accumulate every month, and they actually start from the second your products get in there. So some people think that if they send products to FBA and they sell them right away, they don't get charged any fees. That's not true. You're going to get charged no matter what. If you have products at Amazon, no matter how long they're there, you will be charged storage fees. The longer they sit there, the more you get charged. And you can understand all of these fees by just reading it. Read it. Go on to Amazon's terms of service. Read the updates on the emails and the fees and everything. It would be kind of pointless for me to break down what the fees are to you right now, because they change all the time. They won't be the same in 1 month maybe, or definitely 6 months or a year, right? They change all the time. They add new fees in, they take stuff out, right? So you have to pay attention. And then there are fees that are involved with your sale. So that is pick and pack fees, meaning they're pulling it off the shelf from the storage place, and then they're packaging it up to get ready to send to your customer. And then there's shipping fees. You didn't think it was free, did you? You got to pay shipping. The good news is, if you're not abusing this and you are selling through your inventory quickly enough, you're going to be actually saving money, because there's no way that you could ship an item for as cheap as Amazon is shipping it, and they're going to ship it to your customers much, much quicker. It's going to be very fast, like 1 day, 3 days max. And guess what? You don't have to ship it, so that's great as well. But if you aren't aware of the fees and how much they're charging for different things, you could get caught off guard. So just understand, there's FBA storage fees, there's FBA fees per order, which is like pick and pack and shipping. Then there's also returns. If you get a return because a customer didn't like an item or whatever, then there's going to be return fees. Then there's going to be restock fees, and those vary. Some items don't get restock fees. Some items have a fixed rate fee. All of these fees vary all the time, but it's important to know that there's fees. In no world should you be like, what is this fee? Because you should be aware of it. You should read the terms of service, read all the documents, stay updated, read the emails that Amazon sends you when things get changed. Don't just think you're making money and, that's it. You will be caught off guard and you will be screwed. So please understand what those FBA fees are. Oh, I almost forgot. Huge one. Long-term storage fees. If you have stuff sitting at Amazon's warehouse for longer than 6 months, they charge you a very hefty fee. It's a lot, right? It is a large amount. And so you do not want to have stuff sitting there for 6 months or longer than 6 months. This is basically Amazon just saying, look, we don't want this stuff to be here for longer than 6 months. We're not a storage facility for you to just cold store all your inventory forever. They only want you to send inventory in that actually moves. And they have a whole system based around how much inventory you can send in based on how much and how quickly your inventory moves in and out. If your product sells and consistently moves in and out, they will allow you to have more inventory at the fulfillment center. But if not, you get chapped and then you have a limitation, right? So it's in your best interest to send inventory that moves quickly. You do not want it sitting there. We're not in the business of storing inventory. We want to move units as fast as possible. And Amazon incentivizes that by charging you a ton of money if you leave stuff there for too long. And a lot of people don't know that there is very high removal and disposal fees, which I recommend everybody to look up. I'll try to put links in the description to these different policies so that you guys can read it and be aware of what they are. Like I said, I don't really want to name them right now because those change all the time and that might not be relevant if someone's watching this video a year down the line. But it's a lot. So like, you do not want to send anything to FBA that you don't think is going to actually sell because the return, disposal, or removal fees are prohibitively expensive. In most cases, it will probably be more than the profit you would have made off selling that item. And that's kind of why I recommend people to sell merchant fulfilled before they dive headfirst into FBA, because you're going to make a ton of mistakes as an Amazon seller. And I'd rather you make those mistakes when you have the product at your house, in your garage, in your warehouse, or whatever, because it just makes it so much easier to deal with it. You could take it back to the store that you bought it, returned it, without having to pay an exorbitant, ridiculously high removal or disposal fee. You don't want that in your life, trust me. So how do you stay on top of the fees or even understand how to make money, or if you're making money on a specific product, if the fees are always changing and there's so many different fees? Well, you either use the Amazon Revenue Calculator, which is online on their website, and I'll put a link to that below as well, or you run the product through the Amazon Seller app, right? And you could do that by scanning the barcode, or let's say you're doing online arbitrage, you can point the camera of the phone at the screen and use the image recognition to do it that way. Just make sure you find the right product, and once the product comes up in the Amazon Seller app, you can navigate through the Seller app. This is not a tutorial for how to use the Amazon Seller app, so I'm not going to go through all that. But you can see what the current selling price is and the other sellers that are on the listing. And then the other row on there is how you do the profit calculation. There will be two tabs, Merchant Fulfilled and Fulfilled by Amazon. Make sure you pick the right one and you put in your cost of goods and your cost to ship to the customer. If you're shipping FBA, you can put a per pound rate into the app and it will help you calculate what your shipping costs will be, because you have to ship it to Amazon's warehouse, inbound shipping. How do you know how much that's going to be? I recommend you put it at 75 cents a pound. Now you might pay 50 cents a pound, or maybe a little bit less, or maybe a lot less if you're sending, the right calculation of products, or if you do pallets, it's very cheap. But 75 cents per pound is a great estimate for an FBA inbound shipment, and it actually could be more than that if you're not optimizing your inbound package weight. So when you send packages to Amazon, you want to make sure that you're shooting for around 30 pounds a box. If you don't hit 20 pounds per box, it's going to get prohibitively expensive. Think about it. If you have to send just one item to Amazon FBA, what's it going to cost you for that? $7 or $8? But if you send a box of 20 items, what's it going to cost you? Maybe $20, $25. That's a lot less per item on the inbound shipping fees. So remember that to optimize the rate that you get charged for inbound shipping on your FBA shipments to Amazon, you're going to want to hit 30 pounds or so, maybe even 40 pounds. Don't go over 50 because that's the limit for max inbound weight on Amazon FBA shipments. But don't ship less than 20 pounds unless you absolutely have to, because you're not going to get a good rate. It's going to be very expensive per unit. Now, understanding what it's going to cost you to ship an item merchant fulfilled to a customer is a little bit more difficult, and this is just something you need to learn through experience, through being in touch with the various shipping prices, whether it's UPS or USPS, because who knows which is going to be cheaper or which is the more favorable shipping partner to use as far as what the prices are right now. Just like Amazon fees, shipping fees change all the time, and it only goes up. It doesn't really go down. I mean, sometimes it does, but usually shipping rates with USPS, with UPS, with FedEx, they go up all the time. So you're gonna wanna know what are the current charges for flat rate shipping priority with USPS, for different packages, for the bubble padded mailer or for the small flat rate box, or and what can you fit in there approximately. Over time, you'll know when you're looking at it, you'll like, oh, okay, I could fit this in a mailer, I could fit this in a small box. And you can look at the Amazon product detail page when you scan an item or when you look it up on the website to see what the product weight is. Like, let's say an item is 1 pound, 7 ounces. I will round that up to 2 pounds, and then I'll add 1 more pound for packaging, and I'll estimate that this is going to be a 3 pound package to the customer. It's most likely going to be a little bit less, but it's probably not going to be very much more. So that's just how I would do it. You can also look up rates on a USPS postage calculator, or you can pretend to ship a package on Pirate Ship. Now, what I would do is I would put in the furthest zip code from my location, and that's usually going to be a New York City zip code or address, or an LA zip code or address, or San Francisco. Those 3 cities probably are the furthest cities from everybody, depending on where you're at. And that will tell you what it's going to cost to ship it all the way there. Now, you might get charged less if you ship it closer, like in your shipping zone, in state, etc. But at least you know what it's going to cost if you have to ship it further, because the last thing you want to do is think you're making profit on an item, merchant fulfilled, only to realize that it costs way more to ship than you thought, and you're actually losing money or wasting a bunch of time and breaking even. So make sure that when you're finding products to ship merchant fulfilled to the customer, that you're not caught off guard by what the shipping costs are going to be. You need to understand this stuff if you want to be a successful seller. So I'll put some more links down below to a USPS shipping calculator, maybe to Pirate Ship, or to some other rate documents or whatever, but just make sure you know what the shipping rates are. We're not guessing out here. We're playing chess, not checkers, okay? This is going to be a good one for a lot of you guys. This part is going to cover getting approved to sell restricted brands and categories, stuff that a lot of people are unable to sell when they're new sellers. But the next section of the video is going to cover accounting, and this is huge. A lot of people gloss over accounting, and when it comes time to do your taxes, or when it comes time to see how much money you made on an item, you don't know, right? Or maybe Amazon says your products are counterfeit and you can't prove it because you haven't had good accounting, right? This section right here is going to be about making sure you're actually able to sell the products that you find on Amazon, and if you can't sell them, how to be able to sell them. One of the most common mistakes that I see beginner Amazon sellers make is buying products that they're not actually approved to sell. So picture this, you watched one of my YouTube videos and I was buying a ton of Nike shoes from the Nike factory outlet. So you rushed out and you bought 100 or 1,000 pairs of Nike shoes from the outlet. Surprise, when you get home to list them, you realize that you're not approved to sell Nike brand on Amazon, because you need to submit an invoice to get approved. Don't do that. I'm gonna tell you guys how to get approved at the end of this section, so just stay tuned to the end of the section and I'm gonna tell you how to get approved. In the meantime, let me tell you how you can see if you're able to sell it. So using the Amazon Seller app, when you're at a store or you're doing online arbitrage, you can scan the barcode of an item, or you can use the image recognition to literally point it at your computer screen and scan the product. Right there in the seller app, it will show you are allowed to sell this item, or you are not allowed to sell this item, and you can click on that and request approval, and then they're gonna need invoices, and I'm gonna cover that later. Like I said, just make sure you know how to check if you can sell an item, and this is something that even advanced sellers have to do. You need to know, can I sell this item? Because there's no use in buying it if you can't sell it, right? You need to get approved to sell the items or the brands first before you invest in buying them. Makes sense, right? And it's a very easy mistake. Don't do it. You will hate yourself. Don't do it. Another mistake that goes around the same category is not understanding if an item you're trying to sell is hazmat or hazardous material or dangerous goods. Now, what happens when something is hazmat is you're probably not approved to sell hazmat items on Amazon FBA. You can get approved. You should apply for that. I'll put some information about that in the description as well, but it also affects your shipping. So if you're doing merchant fulfilled and you have hazardous materials that you're selling, you can sell them merchant fulfilled, but when you go to ship them to the customer, there's going to be different rules around the shipping. Most hazmat, I think probably all of it, you cannot ship by air. So no priority mail. It has to go ground only, which is going to either cost more or take longer or both, and require some sort of special labeling on the package. Now, I'm not saying don't sell hazmat stuff, because it can be a gold mine if you know how to ship it profitably and label it properly and make it so it's not a headache. Some of this stuff you have to fill out forms when you ship it, so you want to make sure you're not wasting your time with it. But like I said, it can be a gold mine because people who either don't know how to do it or don't realize they can sell it merchant fulfilled, they just walk away from it. So when you scan an item with the Amazon seller app, it's very clearly labeled. There's like a circle with some arrows, and if you tap on that, it will tell you this is hazardous materials. That's just a warning to let you know, hey, it's hazmat. Make sure you know that, because it's gonna affect how you ship it and whether or not you're actually able to send it to Amazon for the Amazon FBA program. Now, you can get approved to sell hazardous materials on Amazon, and you should apply for that. The thing is that Amazon not only isn't always accepting applications to sell on the hazmat program, even when they are accepting applications, it can take 6 to 12 months or even longer just to get approved. So don't think you're gonna get approved right away. You should definitely apply, because like I said, being approved to sell hazmat is kind of like a good little category. It's like a barrier of entry, right? Most people are gonna just gloss over it, think they can't sell it, or not wanna deal with, waiting so long to get approved. But the people that do jump through those hoops and they make it through the barrier of entry, they're in the promised land, and those are products that are gonna have less competition. So just be aware that hazardous materials are a thing, and this is gonna be like common stuff like aerosol cans or corrosive stuff or flammable stuff, like people buy these things, but you have to sell them and ship them in a certain way. So just be aware of that. Now, another thing that you need to check for when you are looking at buying an item to sell on Amazon is whether or not you're gonna get an IP claim filed on your account if you try to sell that brand or that product. An IP claim is when the rights holder of a product or the brand or the only distributor that's authorized to sell the product tells Amazon, hey, shut them down because that's our product and they're not approved to sell it. And unfortunately, that's gonna be a strike on your account, and you wanna minimize the amount of IP claims that you get. There are some cases where you can fight them, or it's actually one of your competitors pretending to be the brand owner trying to take you down with an IP claim, because like I said, that's a barrier of entry, right? But in general, you do not want to play around with IP claims. You don't want them. There are some software or tools you can use, like IP Alert, that will check for you. It's not perfect, but they're basically referencing known brands and products that people have reported that have filed IP claims on them. SellerAmp, I'll put a link in the description for SellerAmp. That's a scanning app for mobile, for your phone, and for online. They have an online app and a Chrome extension. They have not only a hazardous material alert, they have a are you approved to sell it alert, and they have an IP claim alert on a product. It's not perfect, like I said before, but knowing if something is likely to file IP claims or be hazmat, or can you even sell it quickly at a glance by using a tool like SellerAmp is huge. If you don't have those tools, how do you tell if something might be filing an IP claim? Well, here's a good hint. If you find a great product that sells well, right, and you can tell because it has good reviews, the sales rank is good, and it's quite profitable, and when you look, there's only one seller on it, chances are they file IP claims. And if that one seller or one or two sellers is the actual brand name, so like let's say you're looking at, and I'm not saying Hasbro files IP claims, but let's say you're looking at a Hasbro toy and there's only one seller, but it's like selling like hotcakes, and that one seller's name is Hasbro or Hasbro USA or something like that, you should probably stay away from it, because that is a good indicator that they're filing IP claims. Because think about it like this: what are the chances that you just happen to find a gold mine and you're the only one that found it? It's very low. There's a lot of people trying to be successful on Amazon. If there's a product that's moving consistent units and it's very popular and profitable, there's probably going to be more than one seller on it. I'm not saying this is always the truth, but usually. And because of that, when there's multiple sellers on a listing, that actually gives you a sense of confidence and some comfort, because you're like, look, other people are on the listing, they're not getting kicked off, and it's obviously profitable for them. And of course, more sellers means more competition, so too many sellers is just ridiculous. But oftentimes, having a handful of sellers on a product is actually a good thing, because it tells you those things, that they're not getting claims and that you actually can sell it. And finally, as far as checking on products before you buy them, make sure you check to see if Amazon is selling on that listing, because Amazon is greedy. They usually do not share the buy box, meaning that when someone buys it, they're going to be the one that sells it to the customer, not you, regardless of what your price is. Or if you undercut their price, they'll always undercut you, just cutthroat style. Usually you cannot beat Amazon. I'm not saying don't ever compete against Amazon, but as a general rule, competing against Amazon is not a good move. They usually got the products cheaper than you did, and they have more volume than you do, right? So they can afford to lose money on units while you go out of stock, and then they can sell it and move the price back up to where they want it to be. A couple units, sure, not a problem, but generally I would be very concerned about buying a lot of any product that Amazon sells on the listing. And just to give you like some example, just to illustrate for you, I once had a whole pallet of Akai MIDI keyboards. I had like 400 of them. And I listed them and they were very profitable. I think it was like 400 in musical instruments or something. So they were flying off the shelf. And the first 200 sold quickly. I had the buy box all day. But at some point, it's like the beast of Amazon woke up. I woke the beast, and they snapped to their senses and they started undercutting my price. And it took me so long to sell those last 200. So the first 200, I think I sold those in a week or less. The last 200 took me like 2 months to sell, and I had to fight tooth and nail to sell them. I literally had to price under Amazon, and then I would make a sale or two, and then Amazon would match my price. And I would go under them, and I would make a sale or two, and then Amazon would match my price. And then I would go back up, and then Amazon would match me again, and then I would start going back down again. And I did this every day, just to sell a few units every day until I was out of stock. It was literally a nightmare. So there is sometimes a little bit of latency as far as Amazon's reaction to you being on their listing. But once they realize you're on their listing, they are cutthroat and ruthless with their pricing, and they will not share the buy box at all, if at all possible. So please be aware if Amazon is on the listing, because that's not good for you. If you want to get approved to sell a certain brand on Amazon, you need to order 10 units of that brand that you're restricted in to sell on Amazon. Sometimes you might find a product on a brand that you're not allowed to sell on that you can actually list that product. So make sure you don't buy that product. Make sure the products that you buy to get approved to sell on Amazon, that you're actually restricted on those items. And a lot of people think you need to buy 10 of the same unit, but you don't. You can buy 10 different units. And when you get these units, just remember that you're buying them to get approved to sell on Amazon. So you want to find the cheapest items that you can. You don't want to invest a lot. Oftentimes I'll buy really cheap things like keychains and then just give them away, or buy items that don't cost a lot but have really good sales ranks and will sell quickly. But don't waste your time trying to find products that you're going to make profit on or even break even on just to get approved, because you just want to get approved so that you can start getting those products either online arbitrage or in retail arbitrage and making money. You don't want to waste any time, you know what I mean? Like you waste a whole evening, you don't find any, so you don't make a purchase order, or just buy 10 Nike keychains from Nike.com or from any website, literally any legitimate website, right? That's what Amazon says. You need to get an invoice or a purchase order from a legitimate supplier. It doesn't have to be a distributor. It doesn't have to be a wholesaler. But if you can get a 8.5 by 11 sheet instead of a retail receipt, that is always better. Wherever it is that you get these items from, submit them to Amazon under the request approval to sell a brand. And if you get denied, close that case, or just make sure you start a new case. Don't reply to that same case and send the same invoice again, because that won't work. What you need to do is make a new approval process for that same brand and then submit that same invoice again. It might take you 10 or 20 times of submitting an invoice before you get approved, but trust me, you will get approved eventually. The Amazon workers are outsourced overseas employees, and they are very, very lazy. So another thing you could do to help expedite this process is to add additional information on your invoice. Now, we're not forging it. We're not, doing anything that's bad behavior, but we're trying to make it easier for them to see, hey, here's the Amazon ASIN of the product that I'm getting approved for. Here's the URL. You know what I mean? Circle your name. Make sure your business name matches to the invoice that you received, right? So you want to make sure your Amazon business information matches up with the name and the address on the invoice or 8.5 by 11 receipt that you got. But if you, for example, Google Nike distributor, Nike supplier, Nike invoice, somewhere on that first page of Amazon is somewhere that can get you approved. And just to illustrate how easy it is, during the pandemic, webcams were selling like crazy. Everybody needed a webcam because of the Zoom revolution. And I wanted to sell Logitech webcams, but I wasn't approved to sell Logitech. So I went on Logitech's website and I ordered privacy covers. They're like 99 cents. They're just a little piece of plastic. It says Logitech. It goes over your webcam to protect your privacy when you're not using it. I got 10 of those, so it was $10 plus shipping. Submitted my invoice to Amazon 5 or 10 times. They accepted it, and blam, I could sell Logitech webcams. Don't get it twisted. You don't have to only buy stuff from that website once you get approved. As long as you have authentic merchandise that's not counterfeit, you'll be approved to sell it. And that is a very important point, because it leads me to the next section, which is accounting and saving your receipts so you can prove that your products that you're purchasing are legitimate is a huge thing. All right, this section of the video is called accounting and knowing your numbers, because if you don't know your numbers, you don't know if you're making any money. And like I said before, there's other implications that could literally crush your business and have Amazon shutting you down because you're not doing proper accounting. The next section of this video, which is also very important and is the last final section, is about Keepa, understanding sales rank, and how to read sales rank charts so that you know you're actually making good product purchases. So stay tuned to that, but let's get into this accounting stuff. And I know it's very boring. I hate it too. But if you wanna make money and be profitable and have longevity in the Amazon space or any space, this stuff is important. If you have any success as a retail or online arbitrage or even a wholesaler on Amazon, you are gonna get many counterfeit complaints, and you will probably get some complaints from customers that say sold used as new. Now, I think customers choose a lot of these weird return reasons just because they don't want to pay return shipping, so they want to act like it's not their fault that they returned it, but we just bear the burden of that as sellers, and then we have to prove to Amazon that not only are our products new, but they are authentic. And the way you do that is by having receipts or invoices from your supplier. These are things that you absolutely need to save. I'm not saying you need to save the physical receipt for 2 years or whatever. That's a whole different story. But just make sure you document them. Take pictures of all of your retail receipts, right? So the way that I like to do it is I like to photograph those receipts the day that I make the purchase. That way the metadata, that's a fancy way to just say the information that's encoded in the image, has the date of the purchase with it. And if you just upload those to a Google Drive folder or Dropbox or Evernote or something like that, you don't even have to use like a scanning app on your phone to scan the receipt. Just take a quick picture of it and then upload it and save it. And maybe to save yourself some time, create a folder for each month. So January folder, a folder for the year and a folder for the month, and just throw those pictures in there. Sometimes I'll even take the picture at the counter of the retail purchase. Like right when they give me my receipt, I set it down on the counter, boom, take a picture, and then upload it to the folder as soon as I get into my vehicle, because I need to make sure that I have that image to prove authenticity or newness if a customer makes a complaint. And 100% of the time, a retail receipt will save you for those things. There's a huge misconception in selling on Amazon. People think that retail receipts can't get you approved to sell brands. They can. It's very rare, but it can happen. But they will always save your butt for authenticity or newness. So make sure you photograph those receipts. Google Drive and Evernote have OCR, which is optical character recognition, so that when you upload the image into the folder, you could search. You might not be able to search for the store name because it's probably like their logo on the receipt, but you could search for dates, you could search for product names. It's very, very simple. There's one caveat to this, and that is if you're buying products from places like Marshalls, Ross, Home Goods, or Burlington, those receipts from the store do not say the product name on it. It just has a long number. But guess what? That number matches with the store tag on the item. So the way that you can prove that those items are authentic or new is you need 2 pictures for every product. One picture of the product brand new with the tag on it. So like if it's a shoe, set it on top of the box and display it with the pair of shoes with the Burlington or the Ross or the Marshalls tag forward. So you can see it and you can read the numbers and the barcode and the price. You see, hey, there's a new pair of shoes with the packaging and there's the price tag on it right there and the receipt. That number underneath the barcode matches the item line number on the receipt. So in cases of proving authenticity or newness of those items, you will submit both pictures and probably highlight the line item on the receipt that is that item, so that those 2 pieces together, those will save you, okay? Very, very important. The only way to do this if you don't have those 2 pictures is to be able to get access to either photograph the point of sale screen, which you could ask if you're really nice or you have a good relationship at the store, or to photograph the screen of their handheld scanner, because it will say the product name and the itemized line number on there, right? But other than that, it's just way easier to do it yourself. Take those 2 photos, the photo of the receipt and the photo of the product. But just please do me this favor. Make sure you get these photos, you take them, you save them, you store them. Because if you get caught with inauthentic claim and you can't prove it's authentic, it really sucks. Like, you have to have a receipt of that item within 6 months prior of the date that you actually purchased it. And if you don't, you're just SOL, and you don't want that. Trust me. Another part of accounting that a lot of people aren't doing, and this mistake is costing them a lot of money, is just not tracking your overhead. These are things like if you have storage or a portion of your house that you're using to run this business, you have rent, you have utilities, you might have paper, you might have tape, you might have a subscription to a scanning app or a software, or you bought a handheld scanner, or all of these different things. You need to be accounting for them. You could do this with a very simple spreadsheet, or as your business grows, you might need to purchase a more advanced spreadsheet or make one yourself, or use ChatGPT to do it if you have the time to do that. I have a link in the description for a very advanced tracking spreadsheet that can help you do that sort of accounting. Also, software like Inventory Lab, I think it's like $70 a month or so at the time of making this video. They have robust accounting features. It's actually a listing software that comes with a scanning app. So it's a decent value. It used to be 40, it's now 70, but you get a scanning app that your whole team could log into and use, a listing software, which is the industry standard listing software, and they have accounting in there. So you can add one-time accounting as well as recurring stuff like rent or software or different things. And then you can look at it at a glance and you can see how much items you sold today and what portion of that is profit, including, you know, your overhead as well. So like, you might be thinking you're making profit, but you're not really, because you have other overhead things that you're not accounting for. And some of these softwares can get very expensive. If you're using tactical arbitrage, that's like $100 a month or more. And if you're buying multiple data packages with it, it could go into the hundreds of dollars a month. You know, you might have leads list that you purchase, you have employees that you pay, you have all of these things to track. And if you don't know your numbers, you don't know if you're making any money. So just make sure that you are accounting for all of the expenses in your business, especially the cost of goods of the products, but everything, not just that. Now, this final mistake in the area of accounting that a lot of sellers make is a very important one, and that is Do not mix your business money with your personal money. I know it's very easy. You want to get started. You want to just start selling on Amazon, and that's great. But do yourself a favor and get a separate checking account at your bank and link that with your Amazon account. That way, all of the money that comes in goes to that account. Now, either get a debit or a credit card that's separate from your personal one and use those for business, because when it comes time to do your taxes or to do your accounting, you can pull the transactions from just that account and know that those are all business, 100%. When you get gas for your vehicle, when you're sourcing, you use that card, right? Now, don't carry a balance on a credit card, because I don't want to say that, you know, anyone ended up like that because I told them to use a credit card. Never spend more on a credit card than you can pay off in a single month. You also get, you know, air miles or cash back, which is great. But the main purpose of this part of the video is to have separate bank accounts and cards. You actually probably need 2 more bank accounts than what you already have for your business. Now, one is going to be the checking account for your business. It doesn't have to be a business account. Don't even say, I need to open a business checking account, because that might require fees or certain type of business paperwork that you don't want to deal with. Just tell your bank you need another checking account and use that one for your business, and get another credit card and use that one for your business as well. You can get the business account and the business credit cards later, but just to get started, do these simple moves to keep your accounting and your transactions clear. That second account that I said you're gonna need is gonna be a savings account. It could be another checking account, so this would be the second checking account you opened for your Amazon business, but I recommend it be a savings account, because that's what you're gonna be doing with it. Now, what you're gonna do is when you get your money from Amazon or from your sales proceeds and it comes to you, take 10 to 15% of it, maybe even 20%, and throw that in the savings account and don't touch it. That is going to be your end of the year tax fund, so that when you have to pay income tax on the money you've made from selling online, you're not caught off guard. You actually already have all the money you need to pay that bill in an account set to the side. 20% should be enough, because even if you are in the 30% tax bracket, that amount that comes out of your Amazon payout, that is not your actual profit, that's your gross profit. Out of that, you still need to remove your cost of goods and your overhead, your operating expenses, all of that stuff, maybe your own wages if you're paying yourself. That's a different conversation. But the point is save 10, 15, or 20%, whatever you can afford, of your payouts from Amazon and put it in a separate account off to the side, and just forget that it exists, because you're going to use that to pay taxes at the end of the year. And it might sound terrible, but trust me, when you have to pay taxes and you find out you owe $1,200 in taxes and you've previously never had to pay in money in taxes at the end of the year, now you're a hustler and you got to pay to be a hustler. That money will be there for you, all right? So don't leave your future self high and dry by not putting some of your income to the side to pay for the taxes that is going to be generated from that income in the future. Highly recommend that. Congratulations if you've made it this far in the video. I hope you've learned a lot, and I have helped you, hopefully, to not make some of the mistakes that myself and many other new or beginner Amazon sellers have made. Let's get into the sales rank part. Sales rank is very, very important. I hope you know that already. This is the way we tell how fast something sells on Amazon, is by the sales rank and by reading the sales rank charts. If you don't know, that's with Keepa, Keepa.com. Keepa costs like $20 a month, and as soon as you are getting really serious into Amazon, if not at the very beginning, I recommend that you get a subscription to Keepa. It has a lot of features aside from seeing sales rank and sales rank charts on Amazon pages. By far, those are the most valuable features, and you're going to be using those every single day as an Amazon seller. That being said, a lot of people will look at a chart but not really understand the dynamicness of sales rank. Is that a word, dynamicness? They will not understand that sales rank is dynamic. You see it moving, but you still don't really think about it. You think that like a certain number of a sales rank is good and a certain number is bad, but you'll see a product that's good and it goes into the bad section often, but the important part is that it sells and comes back down into the good section. So just know that sales rank is dynamic. It changes all the time. There's not a certain sales rank that's terrible, because as long as there's movement on that sales rank, it meets your desired frequency or volume of a product selling. That's all that matters, right? And when a product sells, that's the only thing that can make the rank better or push it down. So when you see a sales rank chart and it goes like this, Every time it goes down, it's because it's sold. Every time it goes up, it's because it's not selling. But guess what? Keepa doesn't check the sales rank with Amazon every single second. So when you see a spike, it usually indicates more than one sale. On something like books, one spike probably means one sale. But on most other categories, like the number one toothpaste or the number one chapstick or the number one shoe, whatever, when you see a spike there, that indicates sales volume and definitely multiple sales. So it's not just one, but you won't know what that is exactly until you have more experience in that category or even with that specific item. It's just a guideline that we're using, and you know that movement on the sales rank is healthy. It means it has some kind of volume. In good volume, you just don't know exactly what it is. Another thing you see is estimated sales counts. You'll see this on apps like Seller Amp. You'll see it on Jungle Scout. You'll see it even on Keepa now. They have estimated sales count. But remember, the key word on that is estimated. It is not the reality. It's estimated. So they're arriving at that estimation using a couple different things. They're using sales rank. They're using algorithms. They're using data that they've collected privately with permission from third-party sellers. And they were also doing something that's called the 999 trick, which basically means that if you go on Amazon and you try to purchase some stock from a seller and you say how many quantity do you want to buy, you type in 999 and then it adds 482 to your cart. Well, now you know that seller has 482 because you tried to add 999 and it wouldn't let you. It added 482. And if you go in back and check the next day and they have 432, you can guess that they sold 50 items in a day, right? So that is another data point. Now, if they restock, let's say they sold 100, but they also had 50 more units go live that day, it's going to look like only 50 sold when really 100 sold. So it's also not perfect, but using algorithms, using sales rank, using the 999 trick, and using actual data from third-party sellers with permission is how they arrive at these things, but they're still estimates. Recently, Amazon has added something on the screen that they didn't used to have before, where when you're looking at certain products, it will actually say 100 sold in the last month, or 500 sold in the last month, or 1,000 sold in the last week, or 200 sold in the last day. Now, I would like to believe that is 100% accurate because that is coming from the horse's mouth. Unfortunately, I don't think that's available through an API yet, so you're not getting that number in any of the scanning apps or any of the software tools yet, but when you look on the product detail page and you can see that, that's a really good indicator of sales volume, better than any of the other indicators, better than sales rank, better than anything, but it's not on all products. So just understand how to read sales rank and what estimated sales count actually means before you just assume that something sells 5,000 times a month because Seller Amp said it sells 5,000 times a month. Another mistake that a lot of people make with sales rank and reading Keepa charts is just not really realizing the relationship between supply and demand. So when you see a sales rank graph on Keepa, you got the top graph, which is sales rank and price over time. But underneath that, you can actually see the volume. And this is the amount of stock that all the sellers have. Now, this is what I want you to understand. As long as the demand stays the same, when the volume increases, the price has to come down because there's more sellers actively competing to get those dollars or to sell those products, but the demand stays the same. So what are they gonna do? They're undercutting each other. So the price is gonna come down as a relation. So how can you use that to your advantage as a seller? Well, look at it. When you look at a product and you see that the price is pretty consistent at the level that you want, and you see the sales rank, which indicates the demand, and that's also consistent, right? But then you see on the bottom chart a huge ramp up in supply, meaning more sellers are getting on the listing or more sellers are buying more units and there's much more volume of the product in stock on Amazon. You can expect the price to start to come down. So that would be a sign of less confidence of buying a large volume of that product. I'm not saying it doesn't mean that that product's not profitable, but if you don't know that the demand is about to increase for some other reason and all the data you have shows that the demand is the same, the pricing is the same, but the supply increased dramatically recently, guess what? The price is probably gonna come down. And the opposite is true as well, of course. If the demand and the price, the sales rank and the price are basically consistent and there was a lot of stock, but the stock went down, that shows you that sellers are having a hard time staying in stock and can't meet the demand, and this is likely going to create an opportunity for the price to go up. Because if there's no supply, there's less competition and you can make your price more often, right? Because if it's selling that well, there's that much demand and the profit's there, why isn't it in stock? Because people are either having trouble finding it or the demand is so high that they can't keep it in stock. And in these cases, this is a strong buying signal because it tells you that at the very least, the price is going to stay the same, not go down, and it might go up. And this is how understanding the relationship between supply and demand can help you have an advantage as a buyer when reading Keepa charts and making better purchasing decisions. So keep that in mind. Take everything with a grain of salt, but just maybe in some scenarios, you'll get the right indicator to lean in harder to a product. And in other scenarios, you'll get the right indicator to not lean in as hard. And these are more advanced tactics, but by being able to see those and read the chart more than a surface level of just price and sales rank, you'll be able to make much more educated buying decisions. Earlier in the video, I talked about competing against Amazon on a product listing and how it's not a good idea, but like I said, take everything with a grain of salt. It's not always a terrible idea. So when you're looking at a Keepa chart, there's an orange bar, and that indicates if Amazon's in stock or how long they've been in stock. If it's there the whole time, they've been in stock forever. But let's say that the bar goes and then it drops out. You know, it will say, let's say Amazon was historically in stock on this product for a year straight, but 3 months ago, they dropped out of stock and they were out of stock for a week. Then they came back in stock and they were in stock for 30 days. Then they went out of stock, then they came back in stock a month later and were in stock for 3 days. And then you start to see just these little blips on the chart of Amazon coming back in stock for like a day or for less than a day, or long periods where Amazon hasn't been in stock. These are good indicators that Amazon is having trouble staying in stock versus their previous history where they were dominating the listing and staying in stock the whole time. Now, Amazon doesn't like to share the buy box, and it's not that great to compete against them, but they also want to make sure they have products in stock to ship to customers on every listing. They used to say Amazon is the everything store. It was like their marketing back in the day. So they actually would rather someone be in stock than nobody be in stock. So coming onto that listing can be great if you have data to show that Amazon is not in stock. I like to think of it like they're coming up for air. They're drowning basically when they're out of stock, right? When they're in stock, they're up for air and they're good. Otherwise, they're drowning. They can't stay in stock. They can't keep up with the demand of the product. The demand is good, the price is good, and you see that Amazon is having trouble staying in stock, then you probably can make money selling that product. I wouldn't say go all in on it right away, but depending on what Amazon's ability to stay in stock looks like over time on the chart, you can have a stronger or weaker idea of maybe how many units you should buy. If it looks like they could come back in stock, let's say they were in stock forever and they just recently, only a week ago, went out of stock. So there's been a year of historical Amazon being in stock, and in the last week they haven't been in stock. That is not a strong signal of them having a hard time staying in stock. That could very likely be they're just waiting for their shipment to show up and they didn't order enough units the first time around. So they'll probably order more units this time around and they could be in stock for another year. You don't know, right? You have no idea at all. You know you can make money selling it right now. If you just assume they're never going to be in stock on that product again because they've been out of stock for a week and you buy 1,000 units, you're going to be very hurt when they just show up and never go out of stock again for another year. That is totally different than seeing that they're trying to stay in stock and having a lot of trouble staying in stock, less and less time in stock from the previous time when they were in stock longer, okay? So all of these things can help you immensely when you are trying to make a purchase decision on a product. Understanding all of these little signals. They're not always going to give you the whole story, but oftentimes, and this is what I do and what I recommend, if you're on the fence, like let's say you don't know if you should buy it or you should, but then the signals are in your favor, then I'm going to buy it. And if I was going to already buy it, but I don't know if I want to buy a little or a lot, and then the signals go in my favor, I'm going to buy a lot. If I'm unsure or they don't go in my favor, I'm going to buy a little. I'm going to test the waters, right? And this comes with experience. There will be times where you buy a little and then you sell out really quickly and you can't get any more and you go, dang it, I should have bought a lot. When that opportunity comes around again in the future, you'll make a better decision based on your previous experience. But when you don't have experience with that product or that category or that sales rank, you have to just rely on the data from the chart, and that's all you got. So it's very important to understand how to analyze a sales rank chart, not on a surface level, but on a more advanced level, so that you can make the right purchasing decisions. Now, I have a bonus for you guys. I know I was only gonna cover 5 areas on this video, but I have one more secret bonus area that I'm gonna share with you guys right now. All right, bonus. The bonus that I wanna add here is about repricers. Now, a repricer is a software tool, an online software service, I guess you would say, that monitors the prices of the items on your Amazon account and adjusts them for you all the time to stay competitive. Now, this is very, very important because if you understand what I was saying earlier about supply and demand, you understand that the reason the price goes down when the supply increases and the demand stays the same is because people undercut each other on price so that they can get the buy box on Amazon. The buy box is, or I guess they call it the featured offer now, which is when you click buy on Amazon, it's the offer that gets selected to be sold to the customer, right? It's not Amazon, it's third-party sellers like me and you. And if you want to make sales, you need to be in the featured offer box. Now, not all the time, but usually the person who has the lowest price is the featured offer. Now, I want to be very clear with you, it's not all the time. And it's very, very important that when you price your items or change the price to stay competitive, that you don't make it the lowest price, that you match the buy box, okay? If you have the buy box merchant fulfilled or your products are at an FBA warehouse, please do not match the lowest offer, match the buy box offer. And if you don't know what the buy box offer is and you don't have any software tools, you can go to the product detail page like you were gonna purchase the item, and you can see it will, under the buy button, it will say ships and sold by 321 Wizards. 321 Wizards is the person who has the buy box. Now let's say the price of this item is $50 and 321 Wizards has it listed for $50. If you click on underneath that, it'll say available from 22 sellers used anew. You click on that, you see there are other people selling the same item new for less than 321 Wizards. They're probably selling it for $49, $48, $47, $45, maybe even $42. That's a stretch. But what happens is Amazon gives the buy box to the seller who has the best offer for the customer, and it's not deemed just by price. Your feedback comes into play and a multitude of other variables that nobody actually knows. Now, price is the most heaviest metric weighed against whether or not you get the buy box, but it's not the only one. So don't shoot yourself in the foot by matching lowest prices when you do it manually or use your repricing software, because you're not only going to be cutting profit out and leaving money on the table, but there's a chance of other sellers matching you, and this just accelerates the race to the bottom. And that's the worst case scenario. Ideally, you should match the buy box price so you can share it with the seller who has the buy box. A lot of people undercut by a penny. You can do that. You'll get the buy box a little bit more often, but you're also going to trigger your competition to undercut you by a penny, and this just accelerates the race to the bottom even more. So I highly recommend that you match the buy box. And now here's why you want to have a repricer, because if you're just manually changing your prices, you could change them every day, you could change them twice every day, but depending on how many products you have listed on Amazon, that might not be feasible, and someone who has an automated repricer is actually detecting when the price changes and then changing it for them, right? So let's say your competition is undercutting you by a penny to get the buy box, and all things considered, you guys are pretty equal. You would both get the buy box, but they're undercutting you by a penny, so they're getting the buy box and they're not sharing it with you. You change your price twice a day. Their repricer detects that you change your price and automatically changes their price within 60 seconds or less. So that means that there was actually only 2 minutes of a day where you held the buy box and your competition held the buy box for every other minute of the day, because they were in the buy box much longer. You know what I mean? You come along, change your price, ding, they change their price. They alter their price with the software automatically while they're out having a freaking cocktail at the bar, and then they're making more sales than you. So this is the reason that an automated repricer is very important, but beware, many people sign up for a repricer and turn it on, and then the next day they're crying about how they sold all of their items for prices that were below their profit threshold and they didn't make any money. I do not want this to be you. So make sure you understand how to use your repricer thoroughly before you turn it on, okay? And make sure you include your cost of goods on that repricer. A good repricer will integrate with Inventory Lab or whatever listing software you're using and pull your cost of goods. Worst case scenario, you have to upload a spreadsheet to your repricer that has your item SKU in one column and the price you paid in the other column. And then you make rules, or it has AI intelligence based on your cost of goods, and you tell it, don't ever sell it, or don't sell this item for less than 25% profit, or these group of items for less than 25% profit. And maybe as time goes on, you're willing to accept less and less profit, or to break even, or maybe even to lose a little, but that's under your control. Because if you let it go wild and you don't have it under your control, any rookie can come along and undercut your price by 10 bucks. And then you match them, and now you're selling it for 10 bucks less, and you're losing money on your items. I've seen horror stories of people selling like $100 items and selling thousands of them overnight for a penny because they didn't know how to use their repricer, they didn't read how to set it up, and they just thought it was gonna do it all for them. Don't let that be you. A repricer is a very beautiful thing that most sellers and all serious sellers use on Amazon, but it's not something you can just turn on and let it go. You need to understand how it works. You should definitely have your cost of goods for every item in the repricer so it knows what your profit threshold and your floor price is for breaking even on all your products, and then it can operate from there. Because if you don't, you are gonna get wrecked, absolutely wrecked, and that's the last thing I want. I don't want you to get wrecked. I want you to succeed in Amazon. That's why I make these videos. Now, as far as what repricers do I recommend, if you are a bookseller or a small Amazon seller and you're just getting started, you could use repriceit.com. It's very cheap. It's probably the most affordable repricer. The problem is it's not the best, and it runs on schedules. You can't set everything exactly how you want it. You can get the job done, which is why it's cheaper, but because it's schedule based, it's only gonna reprice items when you tell it to, or when you have it set. So 12 times a day, reprice my items, right? But the problem with that is if you reprice it on the hour 12 times a day, the automated repricer that someone else is using that is actively repricing detects that the price changed and changes it. So yes, you change your price 12 times a day, but they changed it right after, within a minute. So you might have had the buy box for a minute 12 times a day, and they held it for 59 minutes throughout each hour of the rest of the day. Hopefully that makes sense and you could understand that. That's the difference between a schedule-based repricer or an active repricer. Active is way better, but it's gonna cost you more. If you're selling something that's high beta like books that doesn't sell very fast, sure, you can get away with using reprice it or maybe even pricing manually. But if you're selling other categories that are more competitive, I highly recommend you get an active repricer, but they're not cheap. One of the cheaper ones that I really recommend is called Be Cool. It's spelled BQOOL. It integrates with Inventory Lab, and it's actually affordable and has more of the advanced features. There is way more advanced ones that cost like $500 a month, or they charge you a percentage of your sale that you can get into going forward after that, once you're doing 10,000 a month or 50,000 a month or whatever. But I highly recommend you have a repricer. You look into them, you shop around, you ask questions, make sure you understand what you're getting into. And I promise you that if you've been selling for like a month or so, or maybe several months, and you don't have a repricer, the day you get a repricer and turn it on is probably gonna be your best sales day ever. And the reason is because suddenly all of your inventory that you've had for a long time, that's good stuff that could sell but wasn't getting the buy box, it's gonna have its chance to be in the buy box more often, and those good items that have been sitting and becoming stale, they're gonna sell, and you're gonna be left with the slower moving items. Hopefully, at least some of that information was helpful to you and can prevent you from making some of the mistakes that myself and many other beginner Amazon sellers have made. If you want to learn more, if you want to learn online arbitrage or retail arbitrage, I'm going to put two thumbnails here on the screen that you can click on. One is a full walkthrough of retail arbitrage where I take you to the store to buy products and ship it off to Amazon FBA warehouse. And the other is online arbitrage, which is the business model where you buy products online. And in this video, I didn't actually touch the products at all. I sent it to a third-party prep center. They received it and shipped it to Amazon for me. But I go through both business models in depth and I show you everything all the way through. So feel free to check those out if you want to. Like the video if you like it, if you gained any value, drop a comment letting me know what you liked or maybe what I could have included or how I could have made the video better, or just to say, hey, as always, thank you for watching, and remember, if you ain't flipping, you slipping. Peace!